Will the federal funds rate impact your mortgage rate and payments, or does it not? Well, technically there is no direct correlation between your federal funds rate and your 30-year fixed rate mortgages. Your mortgage rate is typically tied to the treasury, the 10-year treasury to be specific, while the federal funds rate will impact things such as credit card, home equity line of credit, anything that's typically a variable rate. Now, have we hit the peak on interest rates? Possibly. There's another meeting in June, and that's going to be a key meeting. That is going to determine whether that is the last of the rate increases for the federal funds rate, or whether the Fed's going to take a pause. If they pause, it is very unlikely that rates will continue to increase thereafter. So that has the opportunity to either be the last increase, or we've already seen the last increase. In a typical economic cycle, what happens is there's a timeline of 6 to 18 months on any federal fund rate changes. So what that means is the impacts in interest rates that you're seeing now have not been felt in the economy. So there is a possibility that we may see some continued unemployment, but there are still employers who are looking for employees. And remember that there are always periods of economic expansion regardless of business cycle, and that's one thing to be mindful of. While some companies in specific sectors may be laying off people, other companies in a different sector may be hiring people, so it offsets the unemployment situation. What that means is that can help continue to spur our housing market. Now, is the housing market in Tampa crashing? The simple answer to that is no. We have just over 9,000 units available in the Tri-County area, while the typical average is somewhere in the 15,000 range. So that means that right now, we do not have the amount of inventory that is typical for this time of year. Now, something else that's pretty interesting is builders have slowed production, not necessarily by choice, but there are labor shortages right now with new construction. Right now, builders just can't keep up with the amount of demand that's out there, so that's causing an additional upward pressure on pricing. So right now, at certain levels, so basically anything under the $500,000 range, we are seeing lots of multiple offers. I had a client today explain to me that, hey, they're getting a little bit frustrated because they've put offers on 3 homes and they've gone for as high as $40,000 over list price. Now, I've heard tons of speculation over the last year that, hey, the housing market's going to crash. This is the time that the housing market's going to crash. Well, it may or may not have crashed in other portions of the country, but the Tampa Bay area has remained very resilient. Now, we have statistical evidence to support this. It's important to understand what is happening in our market specifically and how it may impact you as a buyer or seller. Now, the CPI numbers just came out as well, and we were up a 0.4% month over month, which decreases our year-over-year average down to 4.9%. Now, when you look at peak inflation, which occurred last year, we were actually sitting at about 9.1%. So we're not quite halfway there yet, but we're almost there. Now, the Fed's target for inflation is 2%. Whether we will actually get there or not is going to remain to be seen. I think it would certainly be very challenging for us to get to a 2% inflation, but we are moving in the right direction. We are trending in the right direction where the worst of it could certainly be behind us. Some specific sectors may make things a little bit stickier, but right now our market still remains relatively strong. Now, again, going back to inventory levels, if you're looking to buy or sell, especially if you're looking to sell, if you are looking to sell a home, there's probably not going to be a better time. Why? Typically, 1 week before school starts, the market tends to slow down because everyone focuses on back to school, and you'll start to see some peaks and valleys here and there all the way through the end of the year. But typically, November and December are slower months because people are focused on the holidays, or they're focused on vacations. There are all kinds of things lined up. There are also fewer hours in the day for people to look at homes, so you start to see less inventory come on the market. Typical business cycle. So if you're a buyer right now, I would say make sure you partner with someone who is very market savvy. We would be happy to help and understand, okay, what programs are available for you as a consumer that can help you win that next bid. So any questions, leave your comment below if there's anything specifically that you would like for us to cover. Make sure to like, subscribe, and hit that notification bell for more. We'd be happy to help.